One thing that has kept Bill Gates in the public eye is his unbelievable wealth. He has traded spots with other billionaires on the top podium over the years, but has always been near the top of the list. Gates' net worth currently sits at about $100 billion. As you look at where Bill Gates' wealth is distributed, you'll realize that he has the majority of his money tied up in stocks and other assets. This is common practice for those in the 1%, but it doesn't always insulate them from tough economic times. In this video, we're going to review what stocks Bill Gates is still betting on, even as the market falls. And at this point in his career, Bill Gates is a household name. And not just for creating an easy-to-use computer, he is a business magnate, software developer, and philanthropist. He is most notably the co-founder of Microsoft, the world's largest personal computer software company, and one of the pioneers of the personal computer revolution and the modern software industry. Gates has also written and co-authored several books. While we can't actually see the breakdown of Mr. Gates' personal funds, he is legally obligated to disclose the holdings of his philanthropic venture, the Bill and Melinda Gates Foundation Trust. The Bill and Melinda Gates Foundation is a private charitable foundation founded by Bill and Melinda Gates. Who would have guessed? The foundation is the largest transparently operated private foundation in the world, holding $49.8 billion in assets. The foundation works to enhance healthcare and reduce extreme poverty around the world and expand educational opportunities and access to information technology in the United States. Let's take a look at some of the major holdings that Bill Gates still depends on, even as the market falls. He's bought stock in 13 companies over the last year, and these 5 are the most prominent. The first on our list is unlikely to surprise you. Microsoft, ticker MSFT, is the second largest company in the world at a value of $1.8 trillion. Microsoft is considered a good investment because of its strong financial performance, diversified revenue streams, dominant market position, growing cloud business, and so on. Microsoft has a history of steady revenue growth, high profit margins, and a strong balance sheet. The company has diversified revenue streams with a strong presence in both the consumer and enterprise markets. This helps to mitigate risk. The company has a dominant market position in several key industries, including personal computers, productivity software, and gaming, which provides a solid base of revenue and helps to protect against the competition. The company's cloud computing business, which includes Azure and Office 365, is a key growth driver for the company and is expected to continue to grow as more companies move their operations to the cloud. The company is led by a strong management team, including CEO Satya Nadella, that has a proven track record of successfully navigating the company through industry changes and driving growth. While he did sell some of his position before the tech bubble in the late 90s, he is continually buying more of it back to this day. The revenue and earnings only increase each year, even through an international pandemic. Something tells me he understands the fundamentals of the company he created and is confident that it will continue to grow over the years. The Canadian National Railway, ticker CNI, also takes up a large chunk of Gates' portfolio for his trust. It might seem a little unconventional or boring, but it is actually a very intelligent holding. For starters, the CNR has a long and stable history of operation. It is the largest railway company in Canada and one of the largest in North America for that matter. This gives it a pretty solid base of operation and consumer base. Additionally, the CNR operates in a variety of industries including energy, mining, and consumer goods, which makes it a little less affected by any single industry downturns. Another great thing about the National Railway is that it has a relatively low debt-to-equity ratio, which is good for long-term stability. Furthermore, the company has been increasing its dividends over the years, which is a sign of a financially strong company and is often seen as a positive indicator for investors. On top of all that, the railway industry is considered essential, which makes it less affected by economic downturns. Plus, as the global economy starts to recover, the demand for goods and resources will increase, and the Canadian National Railway will be able to benefit from that. One of the reasons Bill Gates has been able to make such smart investments and stick to proven strategies is his relationship with the founder of Berkshire Hathaway, Warren Buffett. The two have had a tight friendship for decades, and as such, Gates has grown to trust Buffett's investments. For this very reason, Berkshire Hathaway, ticker BRK, is one of his most prominent investments. This was Bill Gates' third largest stock purchase of 2022. Berkshire Hathaway is a conglomerate holding company that is considered as one of the most valuable companies in the world. One of the main reasons why Berkshire Hathaway is so valuable is because of its diverse portfolio of business. The company owns a wide range of subsidiaries and investments in various industries such as insurance, utilities, retail, and manufacturing, which helps to mitigate risk and ensure a steady stream of revenue. And let's not forget about the company's financials. It's sitting on a ton of cash and has very little debt, which means it can make big investments and acquisitions and weather any economic storms. Plus, it's been known to give back to shareholders through dividends and share buybacks. This next stock is by far the most surprising to me. Of course, Mr. Gates seems to have a knack for investing in the type of companies that can handle the toughest of economic times. One of these just happens to be the company Waste Management, ticker WM. WM is a North American company that operates in both the US and in Canada. It owns 293 active landfills and 146 recycling plants. As our society continues to grow, so will the need for waste management. And this means that you can almost guarantee a trajectory of growth, or at the very least, a continuous stream of revenue. The outlook for waste management can be considered positive for several reasons. Number one, growing demand for waste management services. The increasing global population, urbanization, and industrialization are driving up demand for waste management services. As a result, the waste management industry is expected to see a steady growth in the coming years. Number two is increasing focus on recycling. With growing awareness of environmental issues, there is an increasing focus on recycling and diverting waste away from landfills. This is expected to drive growth in the recycling and resource recovery segments of the waste management industry. Next up, we have diversified revenue streams. WM is a diversified company in the sense that they not only provide waste collection and disposal services, but also offer recycling, renewable energy, and other environmental services. This diversification helps to mitigate risk and also positions the company well to take advantage of emerging trends in the industry. Number four is strong financials. WM has a history of strong financial performance with steady revenue growth and solid margins. The stock is valued nearly the same as it was a year ago and flexes a price-to-earnings ratio of 29.16. Quite impressive for a non-tech company. Let's examine this last stock on our list of Bill Gates' 2022 investments, Deere & Company, ticker DE. This particular stock only takes up about 3% of his portfolio at the Bill and Melinda Gates Foundation Trust, but that's no small investment. Just the 3% of the holdings alone is worth about $1.3 billion. So like pocket change. Basically, Deere & Company, also known as John Deere, makes most of its money by selling a wide range of equipment and related services to farmers, construction companies, and other customers. They're one of the leading manufacturers of agricultural equipment such as tractors, harvesters, and planting equipment. These products make up the bulk of the company's revenue. They also make and sell construction and forestry equipment like excavators, loaders, and backhoes, as well as skidders and log loaders. They also offer financing and leasing options, which generate a significant portion of the company's revenue. Lastly, they make money by selling replacement parts and servicing and repairing the equipment they sell. They have a pretty solid customer base, which helps provide a steady stream of revenue. This may be a pretty run-of-the-mill company, wink, but it has a solid business model and is depended on by the majority of consumers in a large industry, agriculture. So there you have it. These 5 stocks have been Bill Gates' bread and butter this past year. Not only that, but he has been increasing his holdings in all of them for years and years beforehand. His investing strategy is to look for long-term investments in companies that have a strong competitive advantage, a good management team, steady cash flow, a large market, and a clear path to profitability. You can always mimic these stocks or use the same principles to find great investments of your own. All we can say is that so far it's been working out for Mr. Gates, so it likely will for you too. And thanks for returning to Profit Protection yet again to learn and grow with us. To support our channel, simply like this video and subscribe for more educational and entertaining content and the occasional joke. So let's continue on the path to financial independence and wellness together. But until next time, I'll be seeing you.